Good morning. It's time for Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Patakia. With me today is Vinny Motiwala. Vinny, good morning. It's a steady start to the week. After 5 weeks of losses, we've finally seen some rebound from lower levels, and the bulls would be hoping and praying that this
continues.
Sustains, of course, yes. And of course, they can't deny the fact that there are earnings reactions aplenty that are still coming in. No major Nifty results today, but of course, there are a lot of broader market names to track.
Absolutely, a lot of broader market names to track that we'll be keeping an eye on. And like you can see on the flashes, also bottom of your screens, also we have con call highlights that come in as well. ABB numbers were not that exciting, and we've seen the stock see a fall coming in. So that is something that we'll be keeping an eye on. But talking about the index itself, look at the Nifty. As of now, it's managing to hold on to gains of 0.3%. It's up 81 points. We've seen a bit of a flip-flop. It fell down, then recovered, and right now it's managed to hold on to that recovery. So that's something that we'll be keeping an eye out on. Now, Bank Nifty, that's not doing well today. Bank Nifty is underperforming, down almost 0.2% trade. 55,500 levels is what the Bank Nifty is at. IT also seeing a bit of an underperformance, so keep an eye on that. And other than that, Nifty Energy, that is also something that is under pressure. The broader end of the market, mid and small cap, that's performing in tandem with the benchmark indices, so not a worry coming in on that front. Nifty mid cap holding out to gains of 0.2%, small cap also 0.2% of gain, but a lot of stocks that are buzzing on the back of earnings and other news flows as well. Which are these stocks? Hormaz, put the spotlight on these top movers and shakers then.
Earnings reactions, of course, you can see some con call flashes from ABB at the bottom of your screen. That stock has taken a bit of a knock. But before we get to ABB, take a look at Utkarsh Small Finance Bank, and that has seen a major knock today, 8% lower on the stock. The quarter has seen a very sharp deterioration in asset quality. Provisions have also gone up. And with this fall, the stock has now slipped below its IPO price of 25 rupees. And not only that, from its 52-week high, which is close to over 50 rupees, the stock is down over 60%. We've already had 55 lakh shares traded already in the first couple of hours of the trading session compared to a 20-day average of just 7 lakh. The other major mover today on the downside is PSP Projects, and that saw a block deal taking place earlier in the day. It's the top loser on the BSE small cap index. Nearly 2% equity changed hands on the index. Details here are not available as of now, and that block deal has resulted in almost 22 lakh shares already having changed hands today at this time compared to its 20-day average of just 35,000 shares. Now, Sarda Energy on the positive side is a big mover today, 17% higher on that stock. At one point was up 20%. It acquired a company from the insolvency process last year, and that has boosted its numbers, and it's the energy business contributing to almost 2/3 of its EBITDA. The top gainer on the Nifty 500 today, and on very, very strong volumes as well. 80 lakh shares of the company have already changed hands compared to a 20-day average of just 1.5 lakh. And lastly, Delivery, one of the many new age companies that were moving, but one of the few that still remain below its IPO price, 6% higher after its results. It's now closing in on that level of 487. It has not managed to cross that yet. And 19 analysts have a buy recommendation on the stock compared to the 24 that track it. But only 8 of them out of these 19 have a target which is in excess of its IPO price of 487. The stock has also seen very strong volumes today. Over 1 crore shares have already changed hands within the first couple of hours of the trading session, and its 20-day average is just 10 lakhs, so almost 10 times its 20-day average. A strong mover on the upside is Delivery, closing in on its IPO price.
Okay, that's interesting. Thank you so much for that list over there, Hormaz. An important one to keep an eye out on in trade through the session today. But MedPlus Health, that's the one that we'll be keeping an eye out on as well. They reported their Q1 numbers. The revenue of the company grew mildly. Its margins and EBITDA expanded during Q1 FY26. We have Gangadi Madhukar Reddy, who's the MD and CEO at MedPlus Health, joining in with us to talk to us about the numbers. Good morning, sir. Thank you so much for giving us your time this morning. Let's start by talking about the revenue. I'm seeing revenue growth coming in at around 3.6% year-on-year basis. First, if you could start by just giving us a breakup in terms of the volumes as well as the pricing growth that we've seen during this quarter.
I would say, given that we have actually introduced a private label product last year around the same time, and private label actually sells at a price which is almost 50% of what the brand sells. So every time we substitute a brand for a private label, we end up actually losing some top line. And that's one of the reasons why you're seeing that the year-on-year growth is actually much less than what it should be. I would say that the volume growth is probably closer to 6 or 7% out there for us. In the normal this thing, you would actually say that the inflation has actually eaten into some of your thing and volume would be lesser. But in our case, given that the price of the private label is way less, and that is actually a significant number amount of private label we sell, I would say that the volume is actually much higher than what the numbers actually show.
Mr. Reddy, good morning. Thank you for joining in. You mentioned you launched a new private label product this time around, but how much of that private label products are now part of your business? The entire business grew around 6% this time around. So what are you expecting the full year growth to be? And if this business is around 19 to 20% of your overall business, how much of a percentage increase do you see over the next couple of years, say?
So while I must tell you that the private label substitution definitely reduces the top line, it is actually more profitable for us. So even if there is a slight degrowth, I don't think we should really worry too much, because in real terms, the amount of money we make on our own label is double of what we make when we sell the brand. Hence, you're seeing that over the period of last 1 year, we have been consistently increasing our gross margin. Now, coming to what will be the outlook for our private label growth, we actually grew pretty significantly in Q4. Q1, we took a slight step back, as I had actually mentioned in the last call. So going forward, it'll probably be around the same or grow at around 1% every quarter in volumes. That is on the private label pharmacy side. So today, I think around 25% of all the medicines we sell come from the MedPlus brand. And this within just a year of us actually launching. So we are obviously very happy with the way it is growing, but we know that this is largely because, the early adopters have moved in and bought the product. Now it is for the rest of the guys who are just sitting on the sidelines to actually convert. Probably be a little slower than the early adoption, I would say. So we'll probably grow at around 1% every quarter, maybe starting next quarter. So the 25% volume which we have of the medicines will probably go to 26, 27, and 28 as we go forward.
And how much is this private label business overall of your business, Mr. Reddy?
As I said, in value terms, if you look at it, in medicine, in medicines, it's roughly around 14%. So 14% of our 6,000 crores would basically be this. So around 800, 840 crores. This is on the pharma side. On the non-pharma side, it is 50% of all our non-pharma sales. So that roughly is around 500 crores. So you combine the both things, maybe it's around 12 to 1,300 crores overall.
Okay. Mr. Reddy, what about your branded side of the business as well? I want to understand the branded generic side. What is the growth there? What are you seeing in terms of the outlook over there? As well as in terms of store opening plans, you all have a strong store opening plan and aggressive plan, especially for FY26. So, both these factors, what are we watching out for?
Sure. So our store opening plan, we had actually mentioned that we do around 600. We have actually grown by 100 net this quarter. Typically, our Q1 is slightly slower, but by the end of the year, we should easily catch up and basically make our 600 stores. So that will happen for sure. On the branded side, while we are the best priced guys out there in the market, we continue to actually have the highest discount in both online and offline channels combined. I see us growing at the rate of the market, but a little bit of cannibalization is going to happen for sure. Some of the guys who come into our stores who buy regular brands and all may get tempted by the lower prices which we have on our private label. Our private label sells at something like 50 to 60% lower than the branded products. So some of them will switch. So for us, the overall growth is going to continue, but I'm not 100% sure of how much conversion will actually happen and so how much the actually branded products will sell.
Okay. And sir, given this store rollout plan that you'll have as well during FY26, what does it do to your margins, right? Currently, margins, I believe, are at somewhere at 8.5%. So for the year, will this 8.5% be something that we will sustain or, any impact on that is what we're watching out for?
I don't see, given that the 600 stores are on a pretty large base of around 4,800 stores, I really don't expect that this to drag it down significantly. it may remain where it is because we continue to increase the gross margin overall. So I'm not too concerned about that, I would say. Probably remain the same or slightly go up.
Probably remain the same. Mr. Reddy, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of MedPlus Health Services expecting margins to remain at similar levels or slightly lower. They're 1.5% down on the stock. Just pull up Premier Explosives though. That stock has exploded after this 190 crore order win from an international entity. The stock is up 9% as we speak. So a significant reaction coming in on Premier Explosives on the back of this order win. There you can see the spike there, 9% higher now on that stock. 462 is Premier Explosives. The markets too are picking up a bit of pace here, 100 points higher on the Nifty, nearing levels of 24,670 as we go into this short break. Put the spotlight on the commodities market with Manisha Gupta on the other side. Welcome back. All things commodities now. Manisha is here with us and she's here to talk about copper prices, which took a big knock last week, Manisha.
Oh, yes, and it doesn't seem to be stopping even now after that 24% of a decline in the previous week and coming off sharply from those all-time highs that the COMEX copper did make. We've seen further decline coming into the prices even now. So when you look at the COMEX copper, it is down 1.5% at this point in time. Some support on LME copper prices seems to be supporting the Indian markets right now, but it continues to be quite choppy. Well, remember, we did see a surprise tariff exemption to the refined copper imports into US, which are going to be attracting 50% tariffs, is what has led to this balancing coming in for the international markets there. The concern now is that US could be looking at a glut right now because a lot of copper was brought in ahead of these tariffs. And now there's not so much of demand. And the storage cost or the warehousing cost is quite on the higher side. So you could be looking at a re-export of this copper coming back from US into London and other European markets. So there's going to be an increase in supplies many of these markets. Is what seems to be weighing onto the space as well. The other thing which seems to be weighing onto the markets is the Chinese refined copper production numbers. Now, for the year 2024, we saw a record number of 13.64 million tons. For 2025, the expectation is that you could be looking at nearly 5 to 7% of an increase, even 12% for that matter, on the numbers that we saw last year. In the first half of 2025 itself, the Chinese refined copper production has gained up by 9.5%, keeping the prices in check there. Especially the Chinese prices have been trading quite flat into the markets there. And the other supportive factor, though, is the demand expectations for China itself. Now, BMI and Macquarie say that between 3.8 to 4.2% of a demand growth is what we could see in this year in sense of copper. So slightly contradicting fundamentals. But if the Chinese demand does come back, because China is a 50% producer and consumer of copper as well, you could be looking at some support returning here.
Okay, Manisha, thank you so much for that, keeping an eye out on copper. But back to earnings, right? Symphony, that's the next company that reports their numbers. Q1 numbers, a weak set of numbers coming in from the company. We're seeing that the revenue has seen a fall of 36%. Obviously, do not forget we had those unseasonal rains that came in. The rains came in sooner than expected. So it does impact the company's overall, sales that come in there. But what is the outlook of the company going forward? What are we watching out for in terms of channel inventory? We have Rupesh Shah, who's the Managing Director and Corporate Affairs at Symphony, joining in with us to talk to us about that. Mr. Shah, good morning. Thank you for giving us your time. Let's start by talking about the Q1 numbers that came in terms of revenue. 36% fall this time. Now, obviously, this is something that would happen to anyone in the air conditioning, air cooling space, given that the rains came in sooner than expected. But channel inventory is also higher. So two parts. One, revenue overall, what is the outlook? Could this whole year be at similar levels? Do you expect a recovery? And channel inventory, those high levels, when do you expect that to normalize?
Thank you. You are absolutely right. All summer-related industry products have suffered, and that too, there was a very high base in June 25 because June 25 was exceptionally good summer. By the way, our June 25 quarter sales is second highest June quarter sales, surpassing earlier based of the base season sales. So YOY, of course, there is a decline, but at the same time, that is what the traction and overall performance. And again, in March 25 quarter, there was huge pre-season sale, and hence March 25 had recorded all-time highest ever top line as well as profitability. Having said that, it is on account of launch of new models, including Air Force range, and also some of the non-household air cooler products, which in trailing 12 months have contributed more than 20%. They are non-seasonal, and to an extent, they have been savior in this quarter, and they consist of kitchen fan, tabletop, large space ventilated cooling, etc. Second part related to the inventory. Certainly, inventory at this point of time in the trade is higher than what it is supposed to be. So there may be a spillover effect of that inventory in subsequent quarter, including current quarter as well as next quarter.
Okay, so you're expecting that to go into Q2 and Q3 as well, right? The inventory issues, by Q3 you're expecting it to normalize.
No, inventory gets normalized normally by February, March, when really consumer sales really peak, and consumer buying happens only from February, March. But in expectation of the season, in March quarter and early December, there is a normal trade sales also.
Okay, and for the full year, Mr. Shah, would you be able to do the double-digit growth? Last time you managed to see a 15% growth. Is that possible this time? Or because of all this, maybe we'll see high single-digit growth? What is it that we're keeping an eye out on?
Again, as per our IR policy, we don't give any forward-looking statement, including percentage of the growth. However, obviously, we have our own business plan as well as standby business plan to maintain the decent top line as well as profitability through various strategies.
Mr. Shah, well, you may not want to give us numbers, sir, but you could give us a yes or no answer. With a 36% drop in the first quarter, do you believe that the rest of the 3 quarters would have enough momentum that you would at least end the year with positive revenue growth?
There are various strategies in place. Let numbers come out and we will see what happens.
I was going through your investor presentation, Mr. Shah, and you mentioned in that your focus is on acceleration of your portfolio resilience and counter-seasonal product-led growth, where you have highlighted towers and kitchen cooling fans, large space venting cooling, and water heaters. Now, is this a conscious decision that you all have taken, considering how the first quarter panned out and how the subsequent quarters are looking like for your core business? And if not, how much of the acceleration would lead to these products being part of your overall top line, say, by the end of the year?
As far as these products are concerned, we have ventured into these products almost for last 2 years. And now we have really scaled them up. We have expanded the range, we have expanded the distribution network, and there is a huge potential to expand further. So even in June quarter, as far as this category was concerned, they have registered quite decent growth with a decent profitability. And as far as water heater is concerned, just last year, we had a test marketing in selected cities and towns, and now we will have all India launch. Rather, we have already launched as through e-commerce as well as large format stores. So, and third segment, which is exports from India, which is again nothing to do with India's summer season. So essentially, these 3 are the verticals where we focus to de-risk as well as optimize the performance.
Mr. Shah, just a last word in terms of, your Mexico as well as Australia subsidiaries. You're looking to monetize that and you're looking to divest over there. So anything on that front, if you could give us, are there any talks going on? Are there any potential, divestment buyers that are there? What is happening here?
Yeah, so it is at initial stage. There have been a decent interest by some very reputed major corporate, and some NDAs have been signed. But as you know, signing of NDA, post that lot of work has to be done. So I would put it, despite good interest and signing of some NDAs, it is at initial stage. Will take some time to take it forward and conclude them.
Very, very quickly, a two-part question, Mr. Shah. By when do you expect this to be completed? If you could give us a timeline here, since you mentioned it's in the initial stage. And part two, since you mentioned exports, is US a part of this export market as well? And do you see any potential impact because of this tariff-related uncertainties on the exports to the US?
Okay. Second part of the question first. So as long as our tariff is lower than China's tariff, which even currently is the case, we are really safe. In fact, in summer of 25, there was decent inquiry and reasonable decent sales to US. Many large format stores of USA are actively in discussion with us, and some of them are in advanced stage of finalizing the order. And we need to really worry about the tariff only as and when the goods are ready to dispatch, which is obviously now meant for summer of 26. And that has to happen few months or few quarters down the line. So we are not unnecessarily worried. And as I say, as long as China's tariff is higher than us, we are really well placed. And first part of the question about the time frame, we don't really have a time frame in mind, but it seems that maybe by H1 of 26, we should see some decent development in respect of IB transaction.
Very quickly, how much is US as part of your overall top line, Mr. Shah?
As of now, it is not material, but the kind of the inquiries and the kind of the orders and the discussions which is happening, that is quite interesting and exciting.
Okay, Mr. Shah, thank you for giving us your time this morning and giving us insights in terms of what we should be expecting from the company in FY26. That was the management of Symphony talking to us about the outlook of the company, channel inventory, that will stabilize by the end of this year, next summer, when the tertiary sales actually start picking up. As of now, Symphony is seeing a decline of almost 3.5%. But on that note, we're going to slip into a very short break. When we return, we'll discuss market technicals with Nagaraj Shetty from HDFC Securities and also discuss stop trading bets. Welcome back to Trading Hour on CNBC-TV18. As of now, markets are managing to hold on to that gain. Nifty 24,670 levels, inching towards 24,700. So keeping an eye out on that. But what's happening in the world of F&O? What are we watching out for there? What are the cues there? We have Mangalam joining you with us for that. Good morning, Mangalam.
Good morning. So, if you look at the way the markets have been progressing all through today's trading session, after a big cut that we saw on Friday, the Nifty ended below the 24,600 mark. There is a bit of a bounce back, an attempt at a bounce back and consolidation taking place from lower levels and from oversold levels as well. So both the Nifty as well as the Sensex are doing well. The broader markets tell you that the advance decline ratio has, more in the favor of advances than declines. Portfolios are feeling slightly better. And this despite the underperformance coming in from the Nifty bank. So if you look at the sectoral indices, the indices that are contributing to the way up, we have, the Nifty Auto as well as the Metals Index, which is doing well. The Nifty Bank is a slight underperformer, though it's moving off the lows and mildly into the green as we speak as well. But importantly, remember, metals and autos are fairly volatile sectors. And with that outperforming in today's trading session, the up move is also coupled with the India VIX rising. Remember, the India VIX, when the market was rising earlier, fell all the way up to 10, and thereafter we saw a sharp spike above 12. And now between the last two trading sessions, the India VIX has moved back to levels above 12, 12.26 to be very precise. So that's something we'll have to watch out for as we move ahead. With the volatility index rising and the market trying to stabilize in this range, what are the option writers playing for? 24,600 put writers. They're fairly active. Early days in the August series, FIs are 91% net short. So 24,600 put writers, fairly active in today's trading session. Premium of almost 100 rupees. On the way up, 24,650 call and the 24,700 call writers, both of them fairly active as well. Premium for both of them between 130 to 150 rupees. You add that to the current spot price on the Nifty, you get a range, a beautiful range that the option writers are looking at. They are expecting support for the frontline index around the 24,500 mark, 24,500 to 24,550. But at the same time, on the way up, around 24,800 to 24,850 could be a bit of resistance, and that's what the street is playing for as a range from an option standpoint. If you want to broaden that out, then maybe look at the technical range, 24,388 with the 100-day moving averages on the Nifty, and on the way up 25,075 with the 20-day moving averages. In fact, between 25,050 and 25,075 is both the 20 as well as the 50-day moving average on the Nifty. So keep an eye out on that one. Watching out for a couple of stocks. UPL, remember the stock was lower after results on Friday. A lot of shorts entered the system, but now the stock is seeing those shorts unwinding their positions, and that stock has moved higher as well. And finally, we have Delivery. Good numbers coming in. The street was surprised positively, and longs are adding on to that as the stock moves to the high point of trade in early trade today.
Delivery, indeed. Fresh long position seen there. Manglam, thank you for that. And since Manglam brought up UPL, UPL has recovered everything that it lost on Friday. It was down 6.5% on Friday. It's up 6.5% today. So it's back to square one after its results. So good going for UPL. Analysts continue to remain bullish on the stock's prospects going forward. Let's also get in Nagaraj Shetty from HDFC Securities for a quick chart check here. Nagaraj, do you use this bounce that you have seen from the sell-off on Friday to trim down your positions or as a sell-on rallies market? Or do you expect some further move towards the 25,000 mark and then you take a call after that? And of course, your stock recommendations for the morning.
Hi, good morning, Thomas. Market has been in a downtrend, no doubt. We have seen lower tops and bottoms on the charts over the period of time. Recently, we have seen market bounces and selling encountered at the high levels. And I'm not expecting this as a bigger reversal at this point of time. Though Nifty placed near the support of around 24,500 levels, this bounce would be an opportunity to sell on rise. At the higher level, 24,800 to 24,900 is going to be a strong resistance. I'm expecting Nifty to consolidate from the higher levels, could come down, and even could reach down to the 24,500, 400 levels in the near term. On the stock specific, I have a mixed strategy. One is from long and one is from short. Hero MotoCo is from long. What we can observe on the chart is this stock has been in a continuous range bound action. Recently, it had made an attempt of upside breakout of the range. Currently placed again at the levels of around 4460, 4455 levels. One may look to buy at this point of time. The upside target will be around 4650, and one can place a stop loss at 4350 levels. And second one is on a short side. Granules India has been in a sharp downward correction. We have seen sharp low tops and bottoms on the charts, recently placed at the lower levels, currently trading around 449 levels. One can look to short at this point of time. The downside target would be around 430. One can place a stop loss at 460.
Okay, Nagaraj, thank you for speaking with us this morning, keeping an eye out on those stocks over there as well. But on that note, we're going to slip into a very short break, and a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18. Access our premium members only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back. Shifting focus to stocks that are on the move other than the ones that we spoke about. Two-wheeler names are the outperformers in today's session, led predominantly by Hero MotoCorp on the back of good auto sales. Sudarshan is here with an explainer on what is causing this up move in these two-wheeler names. Sudarshan.
So all the two-wheeler stocks are higher after reporting the sales for the month of July, and most of the companies have reported sales that were largely in line or slightly better than estimates, and two of the major outperformers are TVS Motor and Hero MotoCorp. So in today's trading session, one stock that is the higher and its top Nifty gainer is Hero MotoCorp, currently up more than 3%, and the reason is now company has reported sales higher than estimates, with both domestic and export segments reporting healthy growth. Total sales have seen an increase of 22%. Domestic sales were higher as well. It was up 19%. Exports, like all the other OEMs, have seen a growth of more than 60%. good part for Hero MotoCorp is that it was led by scooter segment that saw a growth of 64% versus an estimate of growth in the range of 20 to 25%. Domestic segment has seen a growth, but sales were slightly below estimate, especially bike segment where the growth was 18%, which was slightly below estimate. Now, again, festive season is coming and Hero Moto being the market leader in the entry-level segment, and all the commentary you would have heard that rural segment is doing much better than urban segment, and one of the biggest beneficiaries would be Hero MotoCorp, considering the market leader in entry-level segment. Even company is saying that retail activity has remained stable, and with upcoming festive season, volumes are expected to rise. So that's the reason you are seeing an increase in the stock price of Hero MotoCorp.
Okay, keeping an eye out on Hero Moto, managing to hold on to around 3% of gains. But delivery, that's the next one that's in focus. That's also buzzing in trade, and this is coming after its numbers. Mangalam is here to give us more details on this front. Mangalam?
Well, it's been a strong operational performance for Delivery this time around. Remember, the first quarter is seasonally weak for a company like Delivery or for a business like Delivery. 5.5% revenue growth, no great shakes out there. But look at the EBITDA. It's a near 50% growth out there, 53.4% to be precise. Margins improving by 200 basis points. And as a result of that, the net profit increasing by about 67% as well. It's been driven by a couple of factors. One, on the express parcel business, the volumes have grown by 14%, revenues grown by 10%. Margins, while they've compressed a little bit to 16.3%, the management is confident that in e-commerce, the industry can continue to grow at 15% with them holding on, if not growing their market share, especially after the e-com express consolidation. And they believe margins can be between 17 to 18% by the end of this year. So there is improvement, which is likely. And the second half is typically stronger for this vertical. Part truckload, which is where, a lot of the operational efficiencies are coming in. 3% margins have turned into 10% as the spot-on integration has taken place, and the revenues have grown by 17% with a 15% volume growth. Here too, the company believes that over 20% growth is fairly sustainable with 20% ROCE along with improvement in margins all the way between 16 to 18% over the next couple of years. So those two factors doing extremely well for Delivery. Going forward, they believe that CapEx as a proportion of sales will come down as well. And they do believe that, their assets will be better utilized, net working capital days will improve as well. So on all parameters, we will see an improvement, which is why after seeing a rally already in the stock, it continues to do well. Just two things I'll keep an eye out on Delivery. One is the fact that, as we move higher on the stock, there are a bunch of institutional investors which at every level may at some point exit or look to exit. So that may cause some of the liquidity challenges for Delivery. And the second thing that we'll be looking at is how the company copes with one of its largest clients, Meesho, coming out and looking to drive in-house logistics.
Indeed, Mangalam, thank you for that update there. 453 on Delivery, closing in on its IPO price of 487. Take a short break, but just before we do that, here's some good news for our viewers. India's business news leader is now just a click away, and that is CNBC-TV18's all-new app, which gets you breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen to download the app. We'll take a short break. We'll be back on the other side.
Thanks for staying tuned to Trading Hour on CNBC-TV18. Now, the global tech firm Cognizant recently reported for numbers for their June quarter. Posting strong numbers, CNBC-TV18's Reema Tendulkar actually spoke with Ravi Kumar, who's the as well as Jatin Dalal, the management of the company, and began by asking on the macro environment and AI. Listen in.
The macro has not changed as much. It's been similar to what it was before. And I've always spoken about two swim lanes, a slow market and a fast market. In a slow market, we see more productivity-led opportunities with AI. AI is a double-engine transformation. So you can actually power it with productivity. And what I mean by productivity is doing more for less, using AI and making your software development cycles more productive. So using that pivot, we have been able to win a lot of large deals. This quarter, we won 6 of them. Last year, we won 29 of them. The year before, we did 17. So that template is working well. Some clients use the savings to underwrite that money for innovation. Now, what's also happened this quarter, specifically this quarter, is customers have started to create more downstream opportunities on the innovation side of AI. I call it Vector 2 and Vector 3 in my framework. Vector 1 being productivity, Vector 2 and Vector 3 being innovation-led, where customers use AI for building new products, new services, for improving experience, and for generating growth opportunities for the enterprise. So last quarter we said 1,400 projects of AI are there. This quarter there are 2,500 of them. So they have started to trigger off. I mean, there is a good flow of agentic work in the Vector 2 and Vector 3, as I call it. So I would say some sectors have started to open up, like financial services. Financial services is not under the burden of the macro in a way, so it's kind of unlocking a little bit of that. So overall, the macro has not changed, but we are executing well. We've had good traction on productivity-led AI deals. Now we are starting to see initial set of innovation-led deals, which I think is new spend cycles and new labor pools which we can attach ourselves to. Now, coming to your second question on AI, when we gave this metric of how much code is written by machines, 2 quarters ago we said 20%, and progressively, in fact, I spoke to you then. Progressively, it has gone to 30%. This is a hockey stick. It will continue to improve, continue to grow. What we have to do is we have to figure out a way to get our developer community, get our software development cycles, embrace it much more and more. As you embrace it more technology will be consumed. And that is the elasticity of technology. In fact, in the world of agentic, where you're going to have digital labor around you, there's a multiplier to the human labor. You're actually going to see more software consumption. So that's the premise on which I believe that as more code is written by machines, it's going to serve us better. I'm optimistic that we're going to have more total addressable spend because of the unlock of new labor pools, unlock of new spend pools. But we need diversity of talent to capture those opportunities, and I'm optimistic that the total addressable spend and the opportunity we have to service our clients is going to be much more.
Jatin, Ravi spoke about digital labor. With now 30% of code being written by machines, and that number is only going up like a hockey stick. Would we require fewer people? We already had TCS laying off 12,000. NASSCOM is talking about the IT industry being at a turning point and the possibility of more layoffs in the industry. What is your own view? Will we need fewer engineers even as the top line continues to grow? And do you think this year Cognizant will be in a position to give wage hikes because you've already deferred it?
Let me start by saying that we have added 7,500 engineers this quarter on a sequential basis. We are at a point where we have been able to modestly increase our revenue guidance for the year. We are in a unique time in the history of industry where we are seeing the industry transforming with a very powerful technology like AI. And what we can do as management is to try and strive and stay ahead of the curve and see what's coming and prepare for it. From our perspective, we continue to hire from the market. We continue to hire from the colleges. We have spoken about 15 to 20,000 recent college graduates. We will bring into Cognizant this year. We are moving as planned as at the end of Q2. Macro is where it was before. It is still uncertain. There are news every day which could sort of change the trajectory of rest of the year. So we have not taken a decision on merit cycles for 2025. We will do it in a course of next few weeks. Our endeavor is to cover a vast majority of our workforce in the second half of this year, and that's our intention.
The management of Cognizant there. Take a short break here on Trading Hour. But just before we do that, remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. You can tune in to CNBC TV18 Prime at noon for the Global Reset, 1 p.m. for the Big C, and Global Lens at 8:30 this evening.
Welcome back to Trading Hour on CNBC TV18. As of now, the markets are managing to hold on to those gains. Nifty holding on to 24,650 levels. The only one that's trading in the red is Nifty Bank. That's also flip-flopping between the red and the green. We've seen recovery coming in also for Nifty IT, so we'll watch out for where Nifty Bank as well as IT is headed in the second half of the trading session as well. But with that, we're going to wind down this edition of Trading Hour on CNBC TV18. Thank you so much for tuning in. Up next, your halftime report.